Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, welcome back to the show.
Jim, glad to be back.
John, last summer you introduced Alexandria Minerals and its Oronata project as a Discovery Watch candidate. In the last 2 months, the CEO has been fired, and in yet another sign of tough times for the resource juniors, there's been a series of cranky news releases. Any speculation on what's going on here?
Well, Jim, I introduced Alexandria Minerals on June 2nd last year based on its new approach to one of the gold zones in its 30-kilometer land package, which straddles the Cadillac Larder Lake Break east of Val-d'Or in Quebec. Now, I recommend to listeners to go back and listen to that episode on June 2nd, and it's easy to find. You go to kaiserresearch.com and you click on the Discovery Watch link, and there you'll find YouTube links to not just the entire episodes, but beneath that, an alphabetical list of all the companies that we have talked about since September 2016 when they start this program. I do it myself because I can't keep track of all the details of all these companies. It's a good way of catching up what the previous story was. Now, Alexandria went public in 2006 by IPO, led by the founder, Eric Owens. And 6 months later, he picked up a land package that became part of this current 30-kilometer land package. He got it from Ore Resources, which a year later it was a $4 billion buyout at $41 by Teck. Now, this segment is 10% of a 300-kilometer long fault structure that they call the Cadillac Larder Lake Break, and there are tens of millions of ounces associated with it. The fault itself is not really fertile for gold. It's really the splays and structures that run off it that end up accumulating the gold deposits. And from Alexandria's perspective, it's as if they owned the freeway, but none of the streets that come off it where all the fruit stands are located. But there's enough gold associated in close proximity with this fault structure that the project has been an ongoing focus of trying to develop these smaller, open-pittable resources near the surface in close proximity to the fault. And the company has been working on that for the past decade, but it's been something of a perpetual dilution machine below 10 cents. It has almost 500 million shares issued and 600 million fully diluted today. The project started to get Bay Street's attention in 2016 when, as a result of the success Integra Gold, which also turned into was initially a bit of a dilution machine, was having on its Lamaque project. Now, the big breakthrough there was the realization that in the Triangle Zone, there was a set of almost flat-lying veins that were higher grade. But because of the previous understanding of the way of the controls of this deposit, all the drilling, which is designed to maximize the understanding of deposit, was not properly assessing these higher grade veins. So that completely turned around the potential of the Lamaque project, and eventually it attracted a takeover bid from Eldorado Gold. It was priced at $1.21, a combination of cash and share. It was a 50% premium. It came in May of last year, 2017, and it was part of Eldorado Gold's plan to diversify away from its concentration of projects in places like Turkey and Greece, where operating a mine is becoming an increasingly problematic thing. Now, Eldorado was trading at $5 at the time. By the time it closed, the Eldorado paper that the Integra people were getting was worth only 85 cents, and the overall deal was $400 million. But it's even worse today. Anybody who kept that quarter Eldorado share has a position worth about 25 cents today. But at the time, the thinking was, well, whoever it is that acquires Integra will want to have Alexandria's Cadillac break project to the south, and the sort of western portion of it sits immediately south of Integra's Lamaque project. Now, the focus that Eric Owens started to develop in 2017 was in the Oronada zone, and they had outlined something over 500,000 ounces and 15 million tons of 1.2 grams per ton, way back in 2009. But as a result of rethinking the controls of this mineralization, they tested the theory and drilled a down dip hole right down the Orenda 4 zone, and they managed to get a pretty good intersection, 217 meters of almost 3 grams per ton. Now, that's normally phenomenal, but because it was down dip the structure, this was really, it was presented as a confirmation of the theory, and most of last year was spent drilling this system from an angle designed to properly estimate these flat-lying veins and drag up the average grade of about 1.2 grams per ton. We don't have the fruit of that work yet. Sometime in the second quarter, we should get an updated resource estimate, and if that significantly improves the Oronada zone, then we have an open-pittable situation, and it might even be a standalone because it might even increase the total ounces beyond the 500,000 in the all three categories. Now, in April last year, this project caught Eric Sprott's attention. They did a 6 cents financing, 42 million units, and Eric, through his private company, bought 33 million units. And it was really the last financing the company has done. However, they just filed their January 31st 9-month quarterlies, and they basically have no money left. And Eric Owens began working on this problem back in December, saying, okay, we're going to be out of money. We'll need money to finish the resource estimate. We plan to move west and explore other targets along the Cadillac break, both west and east of the Oronada zone. We're going to need a lot of money. And apparently, he was looking for $21 million. And this has just come out in a news release that the company published last week. $21 million worth of a 6 cent unit with a full warrant, some of it with a flow-through charity swap. So that would have been about 350 million shares, probably 700 million total. It would have increased the fully diluted to $1.3 billion. But as we know, the resource sector seems to be back in a bear market after that brief respite in 2016 and a bit of action in the first quarter of last year. Everything has turned considerably grimmer, and raising money to carry on these expensive exploration programs has become a priority for management. But on December 20th, Alexandria put out a news release that a special committee had been formed to conduct a strategic review. Now, when you hear strategic review, you should start to be concerned, because what that really means is that the larger shareholders are getting unhappy with a lack of apparent progress in terms of a higher stock price or an exit strategy, and have told management, or at least the board, you need to find us an exit strategy, which usually means doing a merger with some other company. So we heard nothing further for almost like a month and a half. And then in early February, all of a sudden, Eric Owens announces that he's part of a dissident shareholder group seeking to remove the board members, who also are most of whom are part of this special committee. And the company's response via Chairman Peter Gundy was to fire Eric Owens as CEO for cause. Now, for cause is another legal term which the board will utilize when they decide they want to get rid of somebody, and then they go through all the details of the company and find all the undotted I's and uncrossed T's and say, naughty, 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 you have violated your fiduciary duty, even though you are doing what everybody else does and we're totally okay with when we're not unhappy about something else. This is bad. You're fired. You're out of here. It's the same thing Colorado's chairman, Larry Nagy, has done when he fired CEO Adam Travis. Now, the interesting thing, comparison between Colorado and Alexandria, is that in both cases, the fired CEO owns more shares than the entire board combined. And this is, typical. You find these boards, they have no skin in the game. They are actually the handmaidens of behind-the-scenes shareholders whose significant holding is not disclosed. In this case, Eric Sprott, as a 7% shareholder, is disclosed. Whether or not he is the one behind this, I don't know. Agnico Eagle is the largest shareholder with 8%, and where they stand on all this is also not very clear. But what it turns out to be is that the reason the special committee was formed was not because of an abstract decision, we need to find an exit strategy, but as the company admitted in its news release last week, where it complained about all this unauthorized financing activity being done by the CEO, was that they had indeed received a proposal. Now, of course, they can't say who it was, but I happen to know that the word on the street is that it came from Probe Metals, which is one of my spec value buy recommendations. It's the spin out from Probe Mines, headed by David Palmer. Their primary focus is the Val-d'Or East project, which they acquired when they absorbed Adventure Gold, which was another one of these companies going nowhere, and they finally said, let's find somebody who has Bay Street following and cash in the treasury. And in fact, Probe Metals did have a lot of money in the treasury. So they've been working on building up their resource on the Val-d'Or East project. They even optioned the project nearby from Alexandria last year. However, the word on the street is that the proposal was something like 12 to 13 cents a share in paper. Now, Probe's got a market cap of about $130 million versus $50 million or so for Alexandria, based on its $500 million issued shares. So if this number were actually correct, it would be the equivalent of offering one share of Probe for every 10 shares of Alexandria. And from, let's say, a Probe shareholder perspective, that's actually wonderful, because they are acquiring a substantial land package and existing ounces with a possible, better resource coming from that open pittable resource, quite cheap. From an Alexandria perspective, and a large shareholder like Eric Owens himself, this is not so good, because basically the upside gets capped at 12 cents, and who knows, maybe if the merger were done, Probe might lose 25 to 50% of its value, similar to the way Eldorado did after it absorbed Integra, which, by the way, was a $400 million transaction compared to something only eighth or tenth of the size. So the fight that's going on now is whether or not Eric Owens can reassert his control over the company and have his own set of nominees come in there and replace those on the board. And the board is arguing that their proposal was actually superior, and they do strange stuff like give a 2-cent optionality value to the warrant and discount the flow-through benefit that the charity swap is creating, to come up with saying that, this was actually a 4-cent offer that was going to dilute the company, and which was considerably less than the alternatives that we were looking at. Except the only alternative they were looking at was to kill the company and hand it off to a better supported, higher priced company. This battle is still unresolved. It will play out over the next few months. But I think the real question is, what's Agnico Eagle going to do? As the largest shareholder, what's its strategic benefit in getting shares in Probe Metals, where it is Goldcorp that has the 19.9%? The big elephant in the room is really QMX Gold, which is a former Stan Barty deal called Alexis Minerals. It owns all the land to the east of Lamaque. It owns all the land to the north of the Alexandria Cadillac Break project, and it owns all the land to the west and south of Probe's Val d'Or East project. And this company's got about 200 million shares out. It raised $6.4 million 25-30 cents last October. When that came free trading, the stock has started to decline. It doesn't appear to have any significant disclosed shareholders. It is an enormous land package. It's like this big, giant hole around which everything else is the donut. My guess is that there's a roll-up strategy afoot. Somebody's going to end up owning all of that, and it looks like somebody decided to sacrifice Alexandria Minerals first as part of this plan to turn Probe into the owner of the entire eastern part of the Val d'Or district. So stay tuned to see how this works out, and perhaps to see if it's Agnico Eagle which emerges as the ultimate owner of all of this.
We'll have more with John Kaiser right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with John Kaiser. John, Goldquest Mining dropped sharply last week after it received a court order suspending work at its Romero project in the Dominican Republic. What was that all about?
Well, this is another reason why it is so difficult to be involved in the junior resource sector. It's hard enough coming up with a discovery that works at the metal prices that we have. In this case, Goldquest it's been waiting for an exploitation license on its Romero gold copper mine. It's going to be an underground mine because you're not going to be able to open pit anything in this valley there through which this creek runs. And there's been signs that the exploitation license, which would allow them to go to the next stage and get the start developing this project, which has a relatively small capex below $500 million and is in the money at the current prices. There's been optimism that, given a place like the Dominican Republic, these permitting cycle, they plod along. The company has been very busy doing exploration on the adjacent Tirio concessions, where it is looking for other VMS deposits and gold deposits, and they got a substantial financing last year from Agnico Eagle right during the PDAC week, and they still have about 20 million of that left, but they haven't had a huge amount of success finding new discoveries. But at this point, the market's sitting back and wondering, why bother? Because on the March 27th, the company announced that it had received a court order, not from a federal court, but from a provincial court, suspending all activity on the Romero project, which presumably means all the surrounding project also. And the company did not explain why, because it had not even seen the ruling and the reasons. But Eric Coffin from the Hard Rock Analyst, and he's covered this very closely for quite a few more years than I have, he just published a speculation that it looks like this is a failed shakedown involving a corrupt politician who is so corrupt that he is still in the government so that he can stay out of jail, because as soon as he loses his immunity as a politician, boom, he's off to jail. Apparently, this party has been working with some lawyer types, and the alternative scenario, and I really don't know because the company GoldQuest is not saying anything until it has fully understood all the language and that. There's two angles that this can go. First, somebody was trying to extort a bribe from GoldQuest to allow this project to proceed, and since it's actually illegal to bribe a politician, GoldQuest would have said no, we're just going to go through the proper channels. And so the consequence is that some judge or whatever, working with these lawyers, has been convinced to put out a decision in the name of who knows what, protecting something or other, and all of a sudden stop this project, cause the stock to drop 30 to 50% in price, put a lot of pressure on the company to figure out some way of settling this. The other is that there's some NGO in the background with this campaign of stopping mine development. We can't have mining in any of these places where there are indigenous people and where something might be changed. And so it could be perhaps that they are behind this move to stop this, to stop exploration and development in the Dominican Republic. And it's kind of bad news for the entire country of the Dominican Republic, because if this sort of stuff can blindside a junior, cause the stock to plunge 50% and make everybody just give up, why would anybody want to do any exploration work in a place like the Dominican Republic? Now, hopefully this gets cleared up in the next while and it gets reversed by a higher court, because, of course, the government looks really stupid. It's plodding through the steps of granting this exploitation license. It would like to see its economy grow through additional mine development, and all of a sudden to have some lower-level court stop everything in its tracks, that's got to be embarrassing. But in Canada, we have our own things where we can have something stopped because some First Nations group decides that they don't like what they're seeing, and they can come out and put up a roadblock and also stop a project in its tracks. So it's becoming very frustrating in the junior resource sector when we have to keep worrying about some sort of local opposition, either corrupt or perhaps even with a legitimate concern, suddenly stopping the project. In the case of GoldQuest, this is a serious company. Bill Fisher has worked in this part of the world for a long time. They know how to make sure they have all their social license stuff taken care of. I suspect this is really a problem involving political corruption, but we'll have to wait and see what the actual explanation is.
We'll have John Kaiser's closing comments right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with John Kaiser. John, Eagle Plains announced last week that the SSR mining has started drilling at the Fisher Gold project in Saskatchewan. Will the Taiga Gold spin-out take place?
Well, investors are running out of time to own Taiga Gold via owning Eagle Plains. This Friday on April 6th will be the special meeting where shareholders vote on the spin-out. The spin-out will result in existing shareholders of Eagle Plains receiving 1 share of Taiga Gold for each 2. Even if they end up buying it after the spin-out, they won't entirely miss out on whatever success the Fisher project might generate, because Eagle Plains will retain 19.9% of Taiga Gold. So that's in essence an indirect 20% interest. Taiga itself will end up, if SSR exercises all the terms of its option, will end up with a 20% interest in the project. The spin-out is being done with the assumption that the Fisher project is going to deliver a substantial extension to the Santoy structure that is the basis for the CB mine, high-grade vein gold mineralization. Work done by SSR last year has confirmed the structure exists over a 7-kilometer stretch. The visible gold has been observed where the outcrop was available. So there's a 10,000-meter drill program happening now. It should be done by June, hopefully have results by July, and a sense of to what extent high-grade zones have been identified. Once the special meeting on April 6th is done, the company expects in the following week to set the formal day of record. And this is going to be fairly quick. The day of record is you have to own the shares before the settlement date. The settlement these days is 1 day, so at least one trading day ahead of the or 2 days, I guess. You need to own the Eagle Plains shares in order to get the Taiga shares, and they think that the stock will be trading by the end of April. It will be listed on the Canadian Stock Exchange, which did not particularly please me because right now I don't have a data feed. But KRO subscribers will be happy to know that right now I'm in the midst of setting up getting a Canadian Stock Exchange trade data feed so that I can also cover Canadian Stock Exchange listed resource companies. The one thing to worry about, and this is in northern Saskatchewan, another project that Eagle Plains has, the Chico project, was farmed out to Aben, 80%. Aben was supposed to start drilling, but all of a sudden a First Nations group from Pelican Narrows called a meeting, and I haven't heard the details as to why, but Eagle Plains and Aben decided that based on whatever concerns had been raised by the First Nations group, they have suspended that program, didn't even get it started, just pulled the plug on it. So hopefully this doesn't mean that SSR is also going to encounter problems farther north at the Fisher project. So hopefully cross our fingers that this program gets underway. By the end of April, Taiga Gold should be spun out and trading on the Canadian Stock Exchange.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. His website, kaiserresearch.com.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.